Monday was a bloodbath for Tesla investors, and maybe that means it's time to get out, jump with both feet, close your eyes, don't even think twice, or maybe you've got a lick of sense and you can understand that this is the entire market and not just one little part of it. But is it time to sell your stock, or are you being lied to? Let's find out. I'm Brian. Welcome to Futuraza. So we got our good friend Randy here. Randy is an expert on a variety of topics, a best-selling author, and was one of the very few voices that has been recently repeatedly saying that this day was coming. And of course, this comes out Tuesday, so who knows? We might have huge green days, but as of Monday, this is all very true and relevant. What happened in the market today, Randy? Help me.
Well, today was only the continuation of what started on Thursday. So on Thursday, we had a bunch of manufacturing information that came out that was worse than expected. Manufacturing's already been in recession for 2 years, and this was just more bad news, including bad guidance, expectations for lower sales going forward. So that impacted the market on Thursday. Then on Friday, we had a big miss on the jobs number, with jobs unemployment being at 4.3 and 4.1 last month. That big jump caused something to come into play called the SAM rule. And the SAM rule talks about how quickly the unemployment rate is increasing over a quarter compared to the previous quarter. That SAM rule has been right 100% of the time in predicting recessions, and I don't think it's even had any false positives. So the market went down big on Friday. Then, to make matters even crazier, Warren Buffett sold off half of his Apple stock, and people were calling that, and has also been selling other stuff, has the largest cash hoard ever. And so people were saying, this could be a Warren Buffett rule. Why has he got all this money on the sidelines? He himself said a few months ago that this is partially at least due to the fact he can't find anything he likes. So it isn't so much that he's playing the market as a whole, but rather he just hasn't seen the kind of deals that meet his criteria. But when he sold out of Apple, that was a different kind of signal. 50%, that's a big. His number one holding, his number one position for, I think, the last 15 years or so has been Apple, and now he's cut that in half. So people didn't like that at all. Then, sorry to go so long, Brian, but the other thing was, over the weekend, there was something called, actually started on Thursday or Friday, there's something called the Japanese carry trade. And this is where people were borrowing money in Japan at 0% interest rates to purchase Japanese yen, therefore inflating the Japanese yen higher than it should be. This has been going on for years now, because the Japanese economy has been not great for a very long time. And then they would take that money and just come over and buy treasuries, U.S. treasuries, at 4.5%, 5% interest rates. And that was a great arbitrage, and people were doing it. And some people think it might be as much as $15 trillion involved in that carry trade. Well, that carry trade started unwinding on Thursday, started unwinding big time on Friday. The U.S. dollar fell, the yen went down 5% against, the other way around. The yen went, anyway, there was a 5% change in the yen versus the dollar. I think it was going up and the dollar down. And people bailing out of that trade, which then, created another bit of panic. So what we had this morning as we got up was the highest VIX. The VIX, by the way, is the volatility index. It's also called the fear index. The VIX has only been this high twice before in its history, as high as it was this morning. Now, it evidently is not going to finish the day this high, but it was up in the 60s. That's only been up at that level twice. Once was in 2008, on March 16th, my birthday, which was the beginning of the crash in 2008. And then the other time was at the crash caused by the COVID just a couple of years ago. So it's down now somewhere around 37, 38, which is not as horrible, but still an extremely high evidence of potential panic in the market. There you go. That's what happened.
It's okay to go long when you have answers like that. I appreciate that. I'm happy to make notes along the way. You said that the SAM rule has been accurate. How long has it been around?
The SAM rule is fairly new, but when you come up with a rule like that, you can go back and apply it to history. So
Okay.
they've applied this to the last 70, 60, 70 years, everything, I think, post-World War II. And the SAM
Okay.
stands for this lady, Sam, her last name's Sam. And she's the one that came up with it. She was an ex-Fed, what do you want to call it, analyst. She worked for the Fed as an analyst. And this rule has become something that's been cited by Fed Chairman Powell, has been cited by Kathy Wood, has been it's become a very popular new economic rule.
Well, I would say that investors should not take that as the gospel, because when you create a model halfway through and just make sure it fits in the past, it's not necessarily a predictor of the future. If it was old and had been made and then proved accurate, I think I would have a lot more confidence in it. But I can find correlation in past numbers that don't always hold up in the future, especially on things as rare as recessions.
She was also interviewed on Thursday or Friday of last week, or maybe it was Friday after the 4.3 number came out, and she said she is even not 100% sure that it applies this time because of the huge amount of immigration, and that might be impacting the underlying value concept of the SAM rule. However, having said that, I've been predicting recession for the third quarter since February. I'm one of the few. I think we are in recession. I know for a fact that manufacturing, auto, housing, those are transportation, trucking, those have been in recession. Some of those, the housing, transportation, and manufacturing have been in recession for 2 years. Now you've got you've got auto also in recession, with large inventories backing up in the auto business. So that is more than half the economy, and definitely, clearly in recession at this point.
Now, when you said that the Fed issued guidance for lower manufacturing and I assume consumption in the future, how accurate have they been on those in the past?
Well, the Fed is the least person you want to pay attention to. They're horrible at their projections. It's somebody said the other day, it's probably because it's a committee. Committees, you've got all these different people with all this different data coming in and trying to come up with a joint decision. And that's not necessarily a great way to come to any conclusions. So the Fed is not necessarily the one we're looking at here, but what we are looking at is both the ISM and the S&P having almost identical readings last week on manufacturing. Now, the good news, by the way, it's always nice to have a silver lining. And the good news is both the S&P and the ISM came out with their readings on the service industries this morning. And that's probably why the market, which had been down over 1,000 points, is now back a bit, because the services numbers came in and they were good numbers, or at least good for the economy, saying their order books were full, they're feeling good, they're hiring. So the services in particular, the services that you pay attention to would be travel, would be recreation, would be things like accounting and legal stuff. Those folks are doing okay. That is not 50% of the economy, but if you combine that with government, you have 50% or almost 50%. So now you could be seeing this. What's going to win? Will services and government keep us out of recession, or will manufacturing, auto, et cetera, pull us into recession? So there's kind of the fight right now.
That's a lot of information. Now, one number that I've heard that is mitigating unemployment concerns is the wave of boomers retiring who are leaving the job market intentionally. That's, I think, a good thing that people are getting to retire. Is that helping?
Well, actually they don't. Yeah. So clearly the number of boomers that are retiring is a part of the overall picture. And the fact that we are not making any babies, and so we don't have that many new born in America humans entering the labor force, that's impacting. But the biggest thing clearly right now is the immigration. So when you have millions and millions of immigrations, both legally and illegally coming into the country, that's going to impact. And in fact, let's be honest, if we didn't have those millions coming in over the last 3 years during this labor shortage, we'd be wondering what the heck to do for somebody to, people always talk about, well, who's going to mow my lawn? No, we're talking about who's going to make your cars.
Who's going to do a lot of jobs. I thought the reason we weren't having babies is because you and I aren't married to each other, Randy. Never mind. That's beyond my pay grade. You said that Warren Buffett can't see a good investment at this time. Right. He can't see something he likes. Right. Is it just because he's getting older and his eyes are going bad? Because I can see a few. Maybe he should get that checked.
Yeah, so a lot of people jump on. They say, "Well, he should invest in Tesla." He invested in BYD, but when he invested in BYD, it had a 12 PE, and it wasn't. It was a much better opportunity. He likes those value opportunities, the ones that are completely undiscovered. Now, I could make a super case that the Tesla portion that's undiscovered is robotaxis and Optimus, not to mention energy. And that we're going to be looking at the largest company ever in the history of the world within probably 36 months. That's my guess.
My guess would be, I think 36 months is a good target. Yep. It could be longer, but.
So the arbitrage on that is incredible. If you think there's let's put it 80% that the company will be worth $6 trillion in 36 months. And it's only worth $500 billion now. That's a pretty cool bet.
Doesn't he have like $250 billion cash on hand?
I think it's even more than that now, but yes, on that order, yes.
If you just put 50 to 80 billion into a company like Tesla, do you know what that would do to the share price? Come on, Warren, we're counting on you. And yeah, so Japan's interest rate, as you mentioned, just went from 0 to not 0. I think it went to 0.25. Right. 0 is going to create some very interesting things. And like you were saying about the instability, the Vicks Vapo Rub, I think you called it, was that in Japan, if your market is at 0 and it changes from 0 to non-zero, that's going to have an impact.
Right.
And it's going to also clear your sinuses.
Yeah, that too. Yeah. So if you think about it, yes, the unwind is happening. We know the unwind is happening, but that's still a really low interest rate. So it's going to kick a few people out because they're over leveraged, but it's not going to kick everybody out of that trade. So we'll see what happens. We'll see how that all plays out. And as so many things happen, Brian, yesterday, the market started really, really low, super low, came back because I think the ISM and the S&P showed those services number to be better than expected. We don't know because it's 11:34 California time as we're doing this. We don't know how the markets ended up the day. My guess is that they will kind of back down a bit before the end of the day. But then Tuesday, somebody might look at that carry trade and say, it's not as bad as we thought. And the overall economy is not as bad as we thought. And you could have a whole bounce back. You could have the market back up again.
Well, here's the thing about my viewers, Randy, is they are time travelers. So even though it's only 11:34 on Monday, I bet you that when this comes out on Tuesday, every one of my viewers will be able to accurately predict where the stock market ended today on Monday. So it's very good. It doesn't sound like it's a big challenge to predict the past, but a lot of analysts still can't do it. And it's really weird to me, but I mean, hey, I guess that's fine. Now, the reason I brought you on originally, before the market opened, I had a topic, which is this little clever bit of magic here. Elon just told Tesla investors to sell their shares. Here's why he may be right. Have you had a chance to look at this wet bit of diaper load here?
Okay, you're gonna have an opportunity to maybe surprise me, but I didn't read the article because I believed in my head that I already knew what it was going to say, and because Elon did say that if you don't believe that robotaxis will be a thing, If you don't believe that Optimus will be a thing, then you should sell your shares, because the future value of Tesla will be huge. He didn't say all this. I'm adding to what Elon said. The future.
You basically just nailed it. I recommend anyone who doesn't believe Tesla will solve vehicle autonomy shouldn't hold the stock. You should sell it. And there's a couple reasons for that. It's first of all, it is a little bit of a slap in the face. Buddy, if you don't get the mission, get off the boat, would you? But also, he doesn't want shareholders voting who don't understand the direction the company is going.
Right.
If you don't believe Tesla would solve vehicle autonomy, if let's say vehicle autonomy is impossible, like it cannot be done, man will not conquer powered flight for 1,000,000 years, kind of impossible, then the company's overvalued.
Yes,
okay?
It is currently.
Maybe.
It would definitely be overvalued right now. There's no doubt about it. However, I would clap back a little bit that it appears that Tesla's unit volume and maybe gross sales and profit volumes might all get back into this 50% a year rotation starting in 2025. So without Robotaxi, without Optimus, just with the Megapacks, just with these new cars coming out next year, there's a real possibility that we get back to that 50% growth rate. 50% growth rate does deserve a PE of at least 60, 65, 70%. 70 times. So we could get back into where the valuation is right as those profits start to roll in. We could be looking at a company that does 150 billion next year just with those existing product lines.
So getting back to the article here, however, there are some inherent risks. For one thing, Tesla could be hurt if FSD doesn't scale exponentially. I don't know what you're saying, and I don't agree. It's pretty difficult to quantify how many people actually want to buy a car that drive itself or would be comfortable riding in one. Get real. Get real. Say the same thing about the dawn of the automobile age. That is pants on head ridiculous. Secondly, the Robotaxi rollout hasn't been flawless. He told the team that it would be revealed on August 8th. Unfortunately, it's now delayed. So for that to make any sense, the FSD, the Robotaxi day would have to be just about software. And it's not. It's also about hardware. Sure. And hardware requires you to put it together.
Yeah. No, it's going to be the 1010 will be
it'll be an everything meeting. I think it'll be the app. It'll be the underlying software. It'll be something physical we can view and or touch. And I will be there. I will.
It has the potential to be the most important business day in history.
And when you were saying earlier that one of the reasons the economy might be looking up is because of so much travel, I wonder what percentage of that is me. Because I've been traveling so much, Randy. I've been traveling so much.
You are holding the economy. Last year it was Taylor Swift who held up the economy, and this year it's you.
Yeah, and the weird thing is, she didn't even have to break up with me. I would date her just for that reason. It wouldn't be a real relationship, but the diss track would be masterpiece. So I would accept that. Accept that risk. And maybe she'd get me something nice for my birthday. I don't know, but
it's possible.
It's possible. I will mention here at the very end where no one is hanging out. It's a secret, you guys. I am going to be in Vegas for the big light show at the end of October. I managed to score tickets for just 8,400 frequent flyer miles, which is ridiculously affordable. And I have friends who will be there as well, so I assume I will be staying with them again. And if not, I'll be just sleeping on the ground, just being comfortable with my luggage, because that's fun too. So that's how I do it, you guys. The frequent flyer miles plus friends.
Free room and board.
Bored sometimes,
yes.
But at least you have a place that has a kitchen, so you can be reasonable. Join us in Vegas. You can check out xlightshows.io. Simon does fantastic work. And by the way, it was hilarious. Simon was getting cease and desist notices from Tesla for brand dilution and watering down the value and all that. And he says to the lawyers, look, I don't know how to tell you this, but I just got a Christmas card from Tesla thanking me for all that I do. is it illegal for me to respond to the Christmas card? And they're like, who sent it? He's like, so-and-so. And they're like, we'll call you right back. They call back and they're like, so look, we've decided we're going to find an agreeable solution. Yeah, would you? Because I'm doing your marketing for you. You crazy.
What are you
I get it.
What are you going to
Well, you know what it is that a firm was hired to protect their brand.
Yeah.
And they will sometimes do things that are more aggressive than the client would like.
Sure.
You know, Jane Goodall's lawyers sent a cease and desist to Gary Larson for a cartoon that he made about her. And she had no knowledge of it. She was, doing her research. And when she found out about it, she's like, that's hilarious. I love it. Oh, please don't harass Mr. Larson. He's a good sport.
Oh, my goodness.
Oh, guys, what did we miss? What do we misunderstand? Is this doom and gloom? Is the world over? Or is it just coincidence that the daily stock performance grid looks a whole lot like the pits of hell? Fiery, red, brimstone, it's everywhere. Leave it all in the comments below. Stay tuned. Stay juicy, which I'm still saying because I asked, and the overwhelming reply in the comments was, we are juicy and clever robots, and we are living on the flippity flop.